Okay, let me quickly cover Apple right before the big event, all right, and try to put my 2 cents through. This is a daily chart of Apple. I have some more extensive shorter term charts that I've posted repeatedly during the day, and that's all part of the service that I offer on a live Twitter real-time feed. I've also covered Apple extensively in my previous video cast. So let's take a look at Apple from its from this particular juncture when the stock was trading at around 73. So looking at this chart, it can be interpreted in two ways. Okay, we got a very large sell candle here from the 104 level, which I predicted a while ago, and this is where we are right now. So from a standpoint of looking at this chart, one can say that hey, the stock could come down to about 96.30. Let me actually write down these levels if you get a minute. We're looking at the lower Bollinger at around 96.30. And then we're looking at the upper Bollinger at 103.2 right here. So the stock could very well do this, and it's going to be very choppy tomorrow. You know, all kinds of the machines, the algorithms, and the HFT programs are definitely going to try to make it impossible for the average slow-moving trader to make money on this stock. But these are the extreme scenarios. Extreme scenario stock comes down to about 94 or slightly below that. It basically just repeats this full pattern down here, and then it moves from here fast. Or these are scenarios which I think might happen. Let me a second. What am I doing? Okay, trying to highlight. Okay, magnify this. So let me magnify this a little bit more. Oops, I murdered this thing. Hold on. Okay, this is an hourly chart. Okay, I was looking at the daily. My apologies for kind of wandering here. All right, so what I see here, this is the uptrend line. It's resting right there, which also happens to be the 34-day moving average. So if I get my drawing tool out here, I can say that the stock gets, could get down to about the 96.30, 96, low 96 level. Also the 50-day moving average comes down here. Everybody screams and shout, Apple's over, and then it bounces hard and takes, gets up towards 100.61 around that level, pulls back a little bit, and then basically goes higher. And people wonder why the market does what it does. So I believe my hunch tells me Apple's not going to screw up anything that big tomorrow. This is extremely critical for Apple to step up against the competition, against some dwindling margins, against product scarcity, or the lack of radical new products. So I think they're going to be extremely vigilant with their shock and awe type of presentation tomorrow. So keep in mind, it's going to be extremely volatile. Stock could be halted. Somebody asked that in the show, in the room today, and it can be halted. It's happened before. So saying all that, it's not going to be a cataclysmic event. Even if the stock pulls back, worst case scenario down here, okay, down towards the 93 level, I'm still going to be a buyer. That's the way I look at it. It's just I want the stock to be a little bit lower so I can add to it a little bit more. So let's see what happens. I hope my wish doesn't come through too much, that it breaks below this Bollinger and straight down to 93. Whichever the case, I would be a buyer at this level. The other scenario is that the stock basically bounces from this level and goes straight up. After all, this pattern symmetry is going to be repeated somewhere here. So just the way it is. Every action is an equal and opposite reaction. So this long bar, okay, is going to repeat it somewhere here. It's going to happen. How it's going to happen, I don't know, but that's the way it is. Now also keep in mind the stock is very oversold on a stochastic basis on the daily, and every time it's done that, just see what happened. Okay. So that's my take on Apple. I still have my targets up in the 102, 103 level. My chariot of choice is the 98, 99 weekly calls. So let's be quick, be flexible. Don't be a hero if it's completely breaking down. Don't sit there hoping. I'll try to guide people as much as I can, and we'll go from there. The other stock I'm keeping a very close eye on is my favorite, one of my eternal favorites, which is ISRG. It's building a nice pattern. Notice these two. Let me show you this. Okay, notice these running candles here. Okay, reversal candles. These are good because here it broke loose, and if it fell below, let's say 450, then we'd be in trouble. We'd basically go below the box, test 439, and it not feel too good. But if you notice what it did, it hit this orange line. It hit this orange line, this line, which is the 34 moving average. And it held and it ran from there. So this is a good sign. I still think the stock gets to 485 and higher, and it completes this pattern. This long-winded pattern is finally going to be complete to 540, and that's when people are going to say, wow, awesome trade. Well, try to have some sort of position around these levels, and not just wish that you owned it. Just my gut feeling. Again, this is for aggressive traders. The spreads are very wide, and it's a very erratic stock the way it trades because it's controlled by a few desks on Wall Street, which control, which basically are the market makers or the liquidity providers for ISRG, and they tend to be extremely manipulative, and that's just the way it is. Well, I have a little bit of time trying to pick a stock that let's take a look at. Let's take a look at a stock that we did very well in, which is Veev Systems. And I can tell you that everything is just a-okay. It made a big move. Now it's building a nice bull flag. So if you want to look at it this way, look what it's doing. Now if it breaks below 2670, then we're in trouble. Otherwise, we're a-okay. I still think that the stock gets to the $40 level. Once this bull flag is consolidated, the stock will basically move from here towards this level. There's nothing to stop it. We do have one second. We do have a we do have some resistance around 34, but like I said, this flag is there's nothing wrong in this picture, unless we break below 27. All right, and so again, another great idea to work with. So okay, so that's it for now. I'm pretty tired. I'll re-engage tomorrow. It's going to be an exciting week, an exciting day. We're doing well. The Twitter. Oh, I didn't cover Twitter, right? Twitter. 1 minute. Twitter is Twitter is just running, firing up on all cylinders. If you look at my old Twitter charts, I showed a big gap that Twitter fills at around the $65 level, right here. Let me do a rectangle here. This is a very large gap, and if Twitter continues with this type of momentum and product launches with their buy buttons and all that stuff, I see absolutely no reason. I see absolutely no reason why this stock, after consolidating here or not consolidating, goes straight into the gap. That's $60 to $65. And at this point, it's very likely it's going to do that because this is certainly in the acceleration phase, even though it is overbought. The volume is very strong, and do read up on Twitter and stuff on Bloomberg, and you'll see the stuff they're doing is pretty radical. And if it catches on, that's going to be huge windfall revenues for Twitter from a channel that they haven't explored before. So monetization of the user base is key. So Twitter in this gap is between 60 and 65. Just keep a close eye on it. Again, Twitter calls are not the most elastic. They don't really move that much, penny to penny, dime to dime, but they're great swing trades, for a better choice of words. On the downside, if the stock breaks below, let's say 47, we do have downside to 43. That's it for tonight. Good night.